But we'll get our next speaker up, who is from the best lender you have never heard of, is my description of them. They really are a massive addition to our panel and have been since they launched. And I hate to name drop, but I'm pretty good mates with the CEO as well. So I've known him a long time. And his history, he did and we've actually got a little bit of time, so I can sort of like wallow a little bit in this. But we did a show, I think it was back 2019, around the Heathrow area. And the CEO, Simon Knight, CEO of Lendco, decided he'd come and do the presentation himself. And there were, from people in the audience who've been around a long time, realised that he was one of the main people behind GMAT, for example, and was about as well known in the market as you can imagine. Would come up to me saying, "How did you get him to speak?" It really was, and he knows his stuff. This is a terrific lender. You probably haven't heard of them. If you have, hopefully you've used them. I believe we were broker number 4 they approached. So let's see what Graham's got to say. So next speaker, Graham Palmer from Lendco. Hopefully he will appear any moment, and we're not going to have any more IT issues or Wi-Fi issues. And we do testing on with each speaker beforehand just to check their Wi-Fi connection. But obviously with Liam, he wasn't in the same hotel as when we did the test on Monday or Tuesday. So there's Graham. Good. Okay. Absolutely marvelous. Graham, can you hear us?
Morning, Tony. How are you doing? You right?
Great. Seems like I don't know if you saw the first one, but we lost connection and I had to try and wing it very badly for about 10 minutes.
Bless him. That's awful, that is, isn't it? Poor thing. So you can't prepare yourself for that. So,
you can't, and also fire alarms as well. So I blame the kitchen. Right. So we've got, you should have received this, delegates. This is Lendco's buy-to-let product and criteria guide that's gone out to you this morning. A little bit about Graham. Graham has been at Lendco since April 2021, previously a mortgage advisor and broker in both the regulated and unregulated market. Graham has a great picture of what's important on both sides of the fence, and that is really important. That's one of the advantages I had when I went into broking first time around, is that I'd seen the lending side as well. Graham started in the world of mortgages as an advisor for Lloyds back in 2015. He found himself in the intermediary market a few years later. This is where he started to fully appreciate the importance of a quick and accessible BDM and strives to be just that. Outside of work, Graham enjoys spending time with his family and friends and attempts to squeeze in the odd game of golf in at the weekend. Although he will admit that since his 3-year-old turned up, his handicap has gone down the same way. Does that mean your handicap was decreased, or because you're free?
Yeah, the golf game is out the window entirely as we currently speak, if I'm honest. Yeah. So, but it's lovely because it's because I would like to spend time with the family rather than the poor quality of golf that goes with it. So,
I understand. As a golf story is actually one of my claims to shame coming up later on this year. I won't speak any further about golf because I am officially the world's worst golfer. Claim to fame. Graham once found himself in a position where he was backstage at a festival. I read this yesterday and I'm thinking, why would these people be at a festival? But anyway, raving away with the Chuckle Brothers from the historical BBC children's show Chucklevision. That's right, the to me, to you people. Yeah. Why were they at a festival? What sort of...
So this was back in about 2015, 2016 off the top of my head. As you can imagine, it was all quite fuzzy even at the time. But yeah, no, they actually were there doing a duet with a rapper called Tinchy Strider. If anyone's aware of him, he's quite famous. And the reason behind it, they were doing a To Me To You version for charity, I think, at the time, which is quite cool. But so they actually were performing a song up on stage. And a friend of mine just happened to have connections via his family, so got us backstage passes for the weekend, which was lovely. And just one night we were at a different set entirely, and there they were, boogieing away with their other halves at the time as well, which was all just very surreal. Were
they saying "To Me To You" whilst they were dancing and boogieing?
No, there was no "To Me To You" moves or anything at all. No, but no, very pleasant.
I had that in my head as I was saying it, and it's now gone. So, right, Graham, over to you. I'll see you in about 20 minutes, and please, God, no problems with IT. Right.
Well, fingers crossed. So, no, and first, thank you very much to everybody for joining us this morning as well, and thanks to Tony for hosting us. Yeah, just really at this stage to introduce who we are as Lendco, really. Myself and Graham Palmer, I'm one of the BDMs here, so anything you need generally. I work as a part of a team here of three of us directly, and then obviously on top of that is our sales manager Alex King, who's also well known in the market as much as Simon Knight. From our side of things, we're here really to sort of support you guys in anything you need on a day-to-day basis, whether it be criteria questions or cases, etc., as well. So anything you've got that doesn't quite fit the mold, just pick the phone up to us. we'll hopefully get a way to work around and say yes. So first things first. Let's try that one first. Perfect. Right. So I think I added our criteria guide there as well, which is fantastic at the beginning, but I'll go through that in a little bit more of a later stage, if that's all right in that point thing. So gender, what I hope you're going to get away from today, effectively from our side of things, a little bit about us as a company and who we are, what we offer in the world of complex buy-to-let markets as well. Complex means a lot different to different people. If you've been in the industry for 10 minutes, a simple HMO or multi-unit could look quite daunting to some people. And for other people who've been in the business for 25 odd years and upwards, for instance, then, you're talking more like a PD conversion of 20 units that's held in a trust could be a little bit more on the quirky side and something a bit more au fait with. Complex means different people. Today, I'm going to be looking at the HMO and multi-unit side predominantly and what we can offer in that market and how we support those guys and girls there. And a little bit about our complex ownership structures and who the kind of clientele that we can support as well. A little touch on our credit criteria as well, because it's quite important in this day and age, just to make sure, obviously, that these clients don't fail at the first hurdle. It's always great to get that information from your clients up front, and we'll go through that a bit more. Hopefully then after all that, you'll think about giving us a quick call and give us a shout to make us one of your first choices in the future, which would be great. So who are we? Tony's already used the catch line that we use here, which is the best specialist lender you've never heard of. That might have to start changing that soon, which is lovely to say. I think last time we did a web show with Tony was this time last year, and my colleague Patrick did it at the time. We were able to say we were in a position we had about 120 odd firms on board and about just up to 500 sort of advisors and brokers. That's now changed. We have a distribution panel which we've been building very steadily and carefully, of course, as well. We want to make sure we're talking to the right people and make sure we're still available to talk to you guys. But we're in excess now of 1,100 actual advisors on the books and probably over 250 sort of broker firms at this stage as well, which is great. So we're going to continue on that trend, hopefully, of growing a little bit more. So this time next year, we won't be able to say you've never heard of us. We specialise in standard buy-to-let as much as we do in the complex. From the way we are in the market, I would probably say as a risk curve, we generally put ourselves around the Kent Reliance, Shawbrook, HTB, maybe that sort of neck of the woods, effectively, when we're sort of comparing ourselves out there. And that's because we use a manual underwriting system here. So everything we do, manual underwriting allows us to use common sense and a bit of sort of can-do attitude. Cheesy line, I know, but one we like. But can-do attitude, everything that we do. And we really do stand by that as well. It's important that that's our mantra. We want to try and make everything work as much as we can. On the side of that as well, we do a little bit of bridging. I'm not going to go into it, of course, because of the other guys and girls on the call today, but it's a facility that we do offer. So anything needed, feel free to give us a call on that. We currently lend in England and Wales only. That's our current sort of structure. We can support clients that are not onshore based as well, so we have a little bit offshore of an offering there. So I'll pick up on that again a little bit later on as well. And currently, we managed to get ourselves into a position where we've done over £1.2 billion of lending on just the buy-to-let side. I think we're about 1.5 billion in total with regards to bridging added as well. But yeah, 1.25 I think is the official figure in buy-to-let originations. So not bad for a little firm that's been building themselves up since 2018. So currently a team of 35, which is effectively doubled in size since I started as well last sort of April, a few years ago. And for our side of things, we're really in a position where currently, as I mentioned earlier, our can-do attitude is the reason for that. We've got a lot of guys that come back to us for repeat business, very, very strong in that sort of market. And if we can't say yes, the best second answer I can ever give you guys is a quick no, right? So we try and do that on everything we do. So yeah, that's us. I just added this little quote in here as well. A bit of showboating, I guess, to a certain degree, but it's a nice quote that we got from one of our sort of broker firms that we deal with on a frequent basis as well. The reason I added it is it purely just, again, highlights the fact that we do try and look at things on a bespoke basis, and that we do this, obviously, with that common sense attitude that I mentioned earlier on as well. So, but yeah, we got a lot of great feedback on that basis, and, it works, and that's how we're looking to maintain it. Team of 35, as I mentioned. Now, Simon's already been introduced from Tony a little bit earlier, which is lovely. He's obviously our head guy there, and from that side of things, really, you're in a position where he's renowned in the market as well. So we've got a great backing. And I can honestly say that about the entire structure here as well. All of our senior management team are fantastic. They know what they're doing. They've been in previous roles. So although we're only since 2018 as a firm, they've certainly been in the industry a lot longer than that all added together. And we've got great direction. And to be honest, over the turbulent time we've had in the last sort of 12 months now, they've led us through that, and we've still come out on the right end of things from last year. So even with rate changes, it's good to see. So property types that we offer. Firstly, from our side of things, standard units, it's as simple as that. Your standard flats, your standard buy-to-let properties, semi-detached, detached properties, whatever you might have there. So we look at all that, no problems at all. Our pricing is obviously reflected upon that as well, so it's a little bit cheaper for those kind of units. And we do see them come through more from the sort of portfolio landlord side of things, purely because we've got no upper limits when it comes to portfolio landlords. So a lot of those guys put quite a few of us on a repeat business basis for us as well. And we also see them come off the back of our bridging facility as well, as we do have an exit for that, which allows us to effectively just do one big underwrite up front and then try and get the exit out straight away afterwards, which is great. Makes it a lot more simple and slick. HMOs and multi-units, as they are out and about there in the market right now. So HMOs for ourselves at the moment, we've got a maximum of 8 bedrooms. We would like the client to be in an experienced position. So we very rarely will ever take on anybody that's in a position where they haven't had any sort of buy-to-lets, who are then looking to get themselves straight into a HMO or a multi-unit basis. We want to make sure they know what they're doing, they've had the experience behind them, and they understand sort of the additional costs and what's required to go for a HMO as well. It's not quite as simple as it's an extra 7 bedrooms, but therefore it's an extra 7 times rent, which is fantastic, which is maybe what some of the new clients into the market obviously might think that process-wise, and that's what we're trying to avoid that. Same for multi-units. Now for that, we've got no upper limits, which is fantastic. So from our side of things, we can have a look at anything from a 4 or 5 unit converted property to anything up to sort of 20, 30 odd units in maybe an old PD conversion, for instance, or something there as well. But obviously, primarily, we tend to sort of have a look at how many units, what the client's looking to do from it, what their background experience is, again, is going to be key, playing to how many of those units it will take on. And it's just got to obviously fit the rest of our criteria absolutely fine from that, which I'll go through in a bit more detail in a moment. So we can also deal with units, whether it be standard or multi-units, etc. as well, all above and adjacent to commercial, which is again another strong point for us there. What we'll effectively be trying to do in those situations is have a look at what kind of unit it's going to be, what the retail is that you've got there. So, for instance, if it's a pub or a nightclub, we just have to say no immediately. They're just not something that we've got any appetite for right now. Whereas, if it's maybe a standard bookshop, for instance, or if it's, I had one this morning, for instance, I was looking at it and it was as a snooker table hall, then it would be classed as commercial downstairs, but we're absolutely fine with those kind of units. It would be okay to proceed on them. So PD projects I've already mentioned. We do cap those, but we do offer facilities on that. So, for instance, you're in a position there where, if you're looking at some of the old big office blocks that have been converted, or maybe it was just a sort of simple house conversion, which is under PD, we can take on all those kind of types. Now, we do cap loan to value, and they do come under a slightly stricter ICR basis on that, but generally they work, and from those situations alone, we would always look at those case by case. I think it's probably the best way of putting that, as is a lot of the stuff that we do. So, easiest thing to always do in that situation, pick the phone up to myself or the team, we can always go through that. Ex-local authorities, so again, we can help out with those kind of properties as well. And clientele as well, if you've got somebody who's, LA, that kind of situation, we can have a look at those sort of tenancies in that position. Again, very case by case, want to make sure we understand the kind of tenancies that are going into those kind of properties. But if you've got a copy of the AST, we normally have a run through that to make sure it looks okay and we understand a bit more about, who kind of clientele going in there, and the fact that make sure there's a break clause involved as well, then we're good. But we do lend out to local authorities directly if needs be. And holiday lets as well, which has been obviously increasingly popular recently. So we can look at holiday lets. We can do it on a short-term letting basis as well on the odd occasion. So from that side of things, again, holiday let itself is more of a traditional holiday let. It is what we look at there. But again, there are some cases where we looked at sort of very popular tourist areas that maybe haven't been your traditional holiday let looking places, and we've taken them on board as well. So again, just give myself or one of the team a quick call. We can go through that. No worries. Sorry. No, let me go to the next page. Just go on there. Let's try that one. There we go. Right. So HMO is a bit more detail as well. So how we make them work. So as I mentioned already, 8 bedrooms is our maximum when it comes to any sort of single asset or single unit. With regards to sort of the ICRs on those ones, we do stress them a little bit higher, as you can see from the table just at the bottom there as well. So single and multi-units, for instance, and portfolios, we stress at about the 125, 145 mark, and that's by pay rate on our fixed rate products as well. 150 on the HMO side of things there. So normally always works. Of course, it's very, very rare that these things don't, but it does allow us a little bit of extra coverage in case, and also additional costs that are involved as well in HMOs. So that's the one thing, as I said, I think a lot of unexperienced clients don't realise the fact that they've got to pay for additional costs for, making sure the property's up to fire safety regulations a little bit more, of course, and they're going to be in a position where licenses are going to be required for them and so forth as well. So these are the kind of things that we do try and sort of guide ourselves into having existing buy-to-let ownerships in place already, and making sure they've already got the experience. We do consider lending up to 30 to 75%, only if they're in a position where they can demonstrate they've had 2 single buy-to-lets running for 12 months. So that does allow us to open that door up to them, though, because that's multiple tenancies. They've got the experience at that point there as well. And we have done that for units that are either in the UK and abroad on the odd occasion as well. So again, you might have to have a particularly strong client for that side of things. But you are in a position, of course, where if they are foreign nationals, they're looking to do these, then that's a possibility as well. We have obviously a specialist panel for HMO valuation instructions. Effectively, we do use Connells for all of our day-to-day sort of more plain sailing stuff. After that, we use either someone from the appraisers panel or from the VAS panel, and we tend to find obviously HMOs and multi-units are going to go through those kind of options as well there. At the end of the day, we want to make sure we give the client the best possible option, as well as obviously making sure that we're not charging unnecessary fees. So we go away, get a couple of different options and quotes for them, and then they can come back as well, which is absolutely fine. With regards to valuations, we tend to obviously have a look at whatever the value is going to come back to us on the best option is as well. So what we'll actually turn around and say to the valuer is, can you give us guidance on the best way to please, value this particular unit? Some, for instance, as an example, might be a HMO in a very popular student town, and therefore, going to have no issues whatsoever. Others might be in the middle of a random town centre and there aren't any other comparables in the area. So, they might look at those as 2 very different valuation types, based on comparisons and based on obviously the type of units there as well. So we don't actually set a precedent. It comes down to the valuer and what they think is the best one to do in that particular unit. So so that's all fine from the HMO side there. And then multi-units, of course, as well. So multi-units, we do not have any upper limits on those kind of units as well, which is fantastic. Really opens the door up to quite a little bit extra lending there, which is lovely. With regards to obviously the units as well, we understand that from a single asset point of view, we do cap at 30 square meters. It's got to be the minimum there on these units for us. It's pretty clear cut. I'm afraid we've had a few come for 29 and a half, and I'm afraid to say that we just have to have it as a minimum 30 square meters. Whereas, of course, it comes in as part of the HMO or the multi-unit side of things. If you've got units in there that are sub 30 square meters, we can consider those. Again, we might have a look at sort of a cap on the loan to value to make sure we can get comfortable with it. But we actually did a case, probably if it was last week, the week before, where it was a 5-unit conversion, and effectively 2 of those units came in, I think it was about 18, 19 square meters, and the other 3 of them were 30 plus. So we took that on board. We put a cap on there. I think it was either 65 or 70%. I have to just check that, but we made sure we got comfortable with the unit. He's an experienced landlord as well, so he knew what he was doing with these kind of things. It was his MO all day long. So yeah, absolutely no problems with doing that as well as part of the multi-unit. So with regards to specialist valuations, again, I've already covered that. We use the same process for the multi-units as we do for HMOs as well here. From our side of things, of course, we can consider lending up to 75% as long as they've got 2 single buy-to-lets in place at the moment as well. So same process as the HMOs there. There's no first-time landlords for us, full stop, if they're HMO multi-units, they're looking for it. We can do have first-time landlords on single assets, though. So just to make sure I'm clear that is possible on a single asset basis. Again, as long as they meet a certain income criteria and so on. For our normal single assets, we wouldn't actually require a certain minimum income as well. So it's one of those, if you're not sure where that fits in there initially, the website's got some fantastic information on there nowadays about obviously what we can and can't do for criteria. But, please pick the phone up to us, give us a shout. We'd always happily run through each case with you on a step-by-step basis. So. Little on our credit criteria. So with regards to actually what we can and can't accept as well here. So right now our minimum loan size is £100,000. If it's a foreign national application, we are looking at a minimum of 350 at the moment. So a minimum £350,000 loan. We go by passport, which is quite a key factor for people to know on that basis as well. So just to sort of divert off to foreign nationals really quickly, we are in a position where we have a look at obviously making sure that they meet day-to-day criteria, of course, as well. The minimum 75k per annum income required for our foreign nationals and our expats. But a key factor there is that if they are, let's say, a German national or a French national that's been living in the UK for 5 or 6 years, but do not hold a UK passport, or nobody on the application holds a UK passport, we could still treat those as foreign nationals. If you're in a position where they meet our qualified foreign national criteria, which again on the website to give a little bit of guidance for later on, then in that situation we would treat them as a UK sort of client in that situation. So again, there is a difference in what our maximum loan sizes are going to be, and a difference in what the rate would be for the client, etc. as well. So just get a bit of an idea on that basis. But we're very, very lucky, I must admit, actually, in foreign nationals, because of the fact that we're allowed to, well, we can support clients from all sorts of different places as well. Australia being one of them, which I know is a bit tougher to place with other lenders. America, Canada, we deal with India, Israel, South Africa as well, plus all sort of the normal sort of EU kind of sort of clientele as well out there. So yeah, we've got quite a strong foreign national proposition, and expats for us, they effectively can reside anywhere in the world as well, which is fantastic. So again, a nice easy one there for them. But yeah, again, if anything cases wise, just give me a shout from that side. With regards to the credit side, mentioned there, the 350 is the minimum loan. With regards to the maximum size of it at the moment, 3 million is our maximum. We have been in positions before, of course, where you might have a larger development that's come through, and we've been in a situation we've been able to split titles. So, you know, if you've got a large multi-unit that's come through, maybe doing the bottom 2 floors and the upper 2 floors on different titles, that has worked for us and allowed us to lend a little bit more on those kind of units than we would do normally. So we are open to those kind of ideas, and obviously making it work with a sensible option that works for everybody. So those ones, please feel free to run the slightly larger stuff past us. If we can't do it because it's on a single title, that's fine. Of course, we'll tell you no pretty quick. But if there's a way, as a means of making it work, then we'll have a look at that. Secured arrears, though, of course, the main thing for us is that there cannot be any missed payments on any kind of secured arrears at all in the last 12 months. They can have one missed payment in the last 24 months as a maximum. Of course, we can always ask questions why. But, you know, if it's unsecured debt that's been against, then, again, it doesn't actually fall out of our remit, and we can have a look at that for you from day one. So, again, it's just us getting comfortable with the clients. People have errors, mistakes are made. Someone didn't move over the money one afternoon, for instance, on online banking. Went on holiday, forgot about it for 3 or 4 weeks. You know, it does happen. And we'd like to obviously be in a position where, as long as we can get comfortable with that, we'll move on from there, really. So CCJs, none registered at all in the last 12 months. That's quite critical again. And again, one in the last 24 months of up to £5,000 a maximum. From our side of things, it's got to be satisfied upon completion. So they can come to us with a CCJ. If we can do the loan, then they can obviously then pay it all off prior to us completing. And that's the same for defaults as well, same situation for that. But anything that's any sort of, I'm afraid, bankruptcies, that kind of stuff, or IVAs, I'm afraid to say we just don't go ahead with those situations, full stop in that one there. So yeah, no problem at all with that one. In regards to a little bit about sort of some of the entities that we lend to as well here. So we're actually obviously lending out to personal individuals, no problem at all. Foreign nationals and expats, we lend to both those guys as well. Of course, I've already sort of touched upon that a little bit there. Foreign nationals is capped at 65% loan to value. Expats is 75%. So just to give you a bit more of a guidance on that as well. Portfolio landlords, we love a portfolio landlord. So no upper limits with regards to how many properties they can already have on the books or how many loans they've already got with us potentially as well. We do generally have a sort of a £10 million lending cap initially. And that would be in a position to say if the client's looking to do anything more than sort of 5 million with us up front, we actually have a dedicated team here, which involves the directors, the head of risk, the head of underwriting as well, who'll get involved into it as part of our credit committee. And they'll be in a position where they have a look at that and make sure they can get comfortable with the loan sizes and what the client's looking to do. But yeah, if there's repeat business coming through, we do try and make sure there. So, but yeah, no limits at all with regards to number of properties and lending. Limited companies, and we can go up to 6 directors as well. Obviously a bit of a pain, I'm afraid, with the application type because there's a little bit of manual typing involved in those ones. But you know what? Absolutely fine. We can do that, and we are happy to look at those options. SPVs, LLPs as well, both quite standard, I think, out there and about. So it's something that we love. We do support limited companies quite frequently and with no issues at all. It's kind of more of our MO, really, than personal named individuals. And we can also look after trusts as well. So again, there's not many lenders out there that like to look after things that are in a trust basis. but we can do. So very, very lucky. Our head of underwriting actually used to work for Coutts and picked up a little bit of experience in that background there. So very comfortable with them. And we'll just ask for some additional information at the time in those cases. And offshore entities as well, another key one. So if you've got a limited company that's been set up in Jersey, Guernsey, Gibraltar, Isle of Man, happy to have a look at those options as well. I'm afraid no BVIs, so no good on that side. Yeah. And that sort of brings us to the end, really. I will send out, I think Tony's already got a copy actually of our rate card. So I don't know if you send that out directly, Tony. Amazing, fantastic. So, or it's on the website, of course, as well. So
thank you, Graham. Okay, there's been a few questions. I can't see all the questions, unfortunately, because the screen's gone. But Mike Hurd, hello, Mike, has asked a question. What happens if an introduced client returns to you to obtain another buy-to-let mortgage? Do you accept them directly?
No, we are intermediary only. So from that side of things, we'll be in a position where we have to go back to them. Although if they go back to the originating broker that did the first deal for us, we do have a duplicate button on the portal. That's what I'm looking for. So that makes it an awful lot easier for these guys. Depending on how long ago when we underwritten them the first time, of course, as well, will depend on how much information we need from them. We do try and keep ourselves in a position where we keep it as slick as possible for these clients, especially if we're seeing quite frequent applications from them. So.
Okay. Paul Rhodes, hi Paul, has asked a question. I don't know what part of your presentation is related to, because again, I just popped to the loo. Business val or bricks and mortar only?
Valuations. So valuations for us. Actually, that's dictated to us by the valuer, actually. So our instructions to the valuer is to go out and say, will you look at bricks and mortar? Will it be a yield-based investment, for instance, or is it just sort of under an investment basis? We see a lot of our HMOs and multi-units normally come under the investment basis side of things. But at the end of the day, we don't give them guidance for that. It depends on the unit, depends on the location, depends on the tenancies that are going to be in there as well. So we actually ask the valuer to make that professional opinion themselves and give us a couple of options. What they will do, though, in some instances, or even most instances, if let's say you've got a block of 6 or 7 units there, we'd be happy for them to go away and have a look at both a block value and also a breakup value as well. So I appreciate some clients want to create leases and stuff, and then obviously put themselves in a position where they can then split them up. So.
Okay. Michelle Goodson has asked, what EWS1 form rating do you accept on B1 and B2?
A1, A2, and B1. We don't accept B2, I'm afraid to say. So B1 is our lowest there, and that would be capped at 65% as well, because that does normally mean that the property is safe, but it needs a bit of work still done to it. So whereas some of the other ones, the B2s, for instance, I don't think is acceptable full stop anywhere. I might be wrong.
Okay. Harry has said, waiting to see your products, interest rates. Harry, you should already have that. Just check your email. And Harry's then asked another question. Is there a limit on the maximum portfolio, which I think you mentioned a short while ago? So
no, there isn't. No. We're happy to. We've got some of our clients who've got hundreds of properties on their back books, so absolutely fine. And of course, we like that repeat business. If anything, it makes us more comfortable because they would have good, strong equity normally in the background there, and also allows us to get comfortable with the fact that they know what they're doing from an experience point of view as well. So.
Okay. Andrew Cooper has said, can they raise to clear? But I'm not quite sure what we're clearing, Andrew. Can they raise to clear? Maybe ask the question again. Christine is
maybe assuming if it's clear debts, perhaps. I don't know. I'll try to I'll take a punt on that. Yeah, no, we can do that.
Andrew, just, I'm not quite sure what we're clearing. Christine has said consumer buy-to-lets, which is one of the questions you set yourself. Do you accept consumer buy-to-lets?
We do indeed, yes, yeah. So if a client, for instance, is in a property at the moment and they are looking to move out and do a let to buy, for instance, that's a possibility of us. It's no problems. Or if they're in a position where, of course, they've lived in the property previously or have family living in it previously and now it's been tenanted out, we're absolutely fine with that. We see a lot of it, obviously, with our expat cases because it was the old family home before they moved abroad, so that's never a problem at all. So, okay. And in fact, we're actually quite happy for them to still be in the property up to completion as long as we can get confirmation they've definitely got a moving forwarding on address. So.
Excellent. Okay. Chelsea has asked the question, what about the Republic of Ireland?
Afraid not. No, sorry. Maybe in the future, but for today, England and Wales only. So.
Chelsea, we do actually have a couple of lenders in the Republic of Ireland that we've come across. I can't for the life of me remember who they are because we never get any cases over for the Republic of Ireland. But it's been mentioned in our office within the last sort of 10 days or so, the lenders that will do Republic of Ireland. So give us a call. Maybe the staff, I haven't got a clue. The staff can help you out. Ketan has asked the question, do you require PGs on mortgages or bridging?
We do, yes. We require PGs for all of our applications. So yes, and we'll take 100% PGs. With more complex setups, if there's 6 directors, for instance, there has been a few times we've negotiated that there's lower PGs taken across the board for everybody. And in trusts, for instance, sometimes you might see that setup where the beneficiaries are grandchildren, for instance, you know, we don't want to be taking PGs from those guys normally. So, you know, we're in a position where it's workable if it's a large setup there. But no, on a standard buy-to-let, we will always take 100% PGs from the directors in those situations, or anybody that's 20% or more shareholders. So obviously, there's no intention to use that, by the way, of course, as well.
Hopefully not, and they never do. I've been told it's very
of course.
PGs ever called in. So,
well, I mean, it involves you having to effectively, firstly, not pay your mortgage, which is a bad start, and then secondly, having to be then in negative equity, which is obviously another bad situation. But you know, the way the market's been over the last few years, it's just not been an issue. So,
and you can get PG insurance these days as well. So, Andrew Cooper's asked, doesn't a property need to be unencumbered to be in a trust? I haven't got a clue, to be honest with you. My staff will know. I haven't got a clue.
Do you know what? I would probably have to refer that just to double check. But I mean, yeah, we have done capital raising, so it's no problem at all for those situations. Just trying to think the last time I saw a trust actually was a few months back. I will revert to underwriters to double claim that, but I have to go back to yourself directly. That's no problem at all. But yes, we would be able to anyway.
One more question, well, two questions, but in one. Mohammed has asked, what's the maximum LTV above commercial?
So 65 is the rule of thumb for pretty much most commercials. We have had a few where you would never know it's commercial downstairs. For instance, you know, you might have an accountant's office downstairs, or a very oldie bookstore or something, for instance, that's down there. And we have done those a little bit higher as well. So we've looked at those at 70 and 75%. So I would say 65 is your norm, but anything that doesn't look like it's retail, then we can always have a chat with our credit forum. Once a day, we're actually in a position where we talk to our head of underwriting, our directors, etc., and any slightly quirky cases. At 10 o'clock each morning, we have a call to run through those cases with the guys, which is great because it just kind of means that we get to say yes or no with confidence up front with the deal. And, you know, 90% of those go through as well, as we say, from day one. It's only if there's any major changes of valuations or with the credit checks, etc., afterwards. So,
okay. And Mohammed, just the second part of your question was above a coffee shop, so I presume, Graham, that's going to be...
happy to have it in coffee shops, as long as it's not a raving coffee shop that's alcohol at 10 o'clock at night. That'd be a bit of a different conversation, but no, we don't see many of them. So
we've got plenty of those in Berkhamsted. I'm just scrolling down. Andrew's asked regarding CCJs. I think that actually, Andrew, that's in the criteria we sent you today, so check that out. I think it was none in the last 12 months, one in the last 24, maximum 5 men must be satisfied. Look at me, 9 criteria. Wow. Spot
on.
Wow.
I wonder if that was relating to the question from before. We can't capital raise to pay off CCJs or defaults at that stage. We'd expect that to be done by the client prior to the case going through. So if that's what you were asking earlier, then hopefully that's answered that question.
Okay. And Ketan has asked, would you allow the breakup of flats of a multi-unit block on a buy-to-let mortgage?
Can do. We can have a look at them individually. On an individual basis, there might be a difference in appetite there, but we'll have a look through it for sure. And again, it will come down to why they've been split up. We don't always necessarily lend more against those on the occasion. I know some people think they get more of a value out. Sometimes you do, sometimes you don't. So it depends on the reasons.
It's kind of with the sirens on today with all the speed.
Sorry, I mean, mainstream London,
Can't apologise for police cars going past.
Yeah, it's an ambulance, this one, so it's all right. It's gone.
Andrew's asked if he meant to clear outstanding debt CCJ, which you just answered fine.
Yeah.
And Andy Virgo's just put in the word Kensington. I'm not quite sure what that relates to. So just Kensington, does that... Any idea?
No, I'm based in Gracechurch Street, so I'm afraid it doesn't help. I'm afraid no.
Right, okay. Chelsea said regulated buy-to-lets, that's consumer buy-to-let. Yeah, they'll do those. There's lots of questions coming over thick and fast. Jack has said, do you allow flats over a business? I think you've already covered that as well. Yes, you do. Over most, I would say. There's always the ones that you can't do. Certainly dry cleaners is the one we always have the most problems with because of the chemicals.
Yeah, it is difficult because of chemicals and stuff downstairs, so it creates an issue. But normally, I'll be honest with yourself, a lot of those will come down to underwriters. You know, we have to rely on underwriters' comments. That's the issue with it. And if it comes out negative comments, I'm afraid that puts us in a bit of a tough situation. But we're happy from our own policy side to have a look at it for sure.
Okay, Ketan has said, is it 65% also if there is a house which is attached to a pub?
We may not have the appetite because it's adjacent to a pub So we actually may say no to those ones, but we have said yes to a couple. So I guess the only option there really would be to send the case in to us. We'll have a little look on Google View and see where we're at on that one. So if there's like an alleyway in between the two, then we might be able to work that. If it's directly attached to the pub itself, that could be very difficult. So to be honest.
Graham, thank you very, very much, Lee. Very informative. I've learned something. I know exactly what your CCJ criteria is, as I've already demonstrated. But thanks for that. Really appreciate it. Simon will remove you from the room. Don't remove yourself. You might close down the whole show.
I was told before. Yeah, absolutely.
You have that power. But thanks again. Really appreciate it. And we'll speak to you very soon. Okay, everyone, welcome back. We're going to our third speaker. Just had a question that was asked, I think, just after we went on the break. Mark has asked, all done through Specialist Hub. If that relates to Lendco, I mean, obviously Lendco accept business direct from a large number of people. I don't know whether you can go to them direct. I don't know your circumstances. They have been on, say, we've been number 4 on the panel since time started, or since they started. And I think we're one of the few brokers or packages that actually has them on a sourcing system, which I'm going to be covering later, because they don't normally. Last time I looked, I can't remember seeing them on 27 Tech, Trigold, Mortgage Brain. So we can source their business. So anyway, we're on with Matt Yates, who I can see has just appeared. And Matt, can you hear us?
I can you hear me?
It's loud and clear. I don't know if you saw the first presentation, but we had problems with connections, fire alarms and all sorts going off.
Oh,
hopefully this won't happen. There'll be no problems with you, and there never normally is. So you're presenting from somewhere sensible and not some hotel somewhere, God knows where. Anyway, let's just start off. Let's do first of all, our next speaker is Matt Yates from InterBay Commercial. He's their specialist finance account manager. You will receive the InterBay product guide by email this morning. So have a quick look at that. Grab that if you can, just so to follow his presentation. A little bit about Matt. Matt has been working in the mortgage industry since 2005. Starting with just one account, he helped set up RBSIP, which later became NatWest Intermediary Solutions. Matt progressed to a field sales position with Platform and then moved to Precise Mortgages. Matt took the opportunity to take a sidestep to InterBay in October 2021 and is currently working as Specialist Finance Account Manager whilst continuing to help brokers with Precise Bridging Finance. So a man with many hats, you can see. His claim to fame, I'm going to have to question him on this, but in the late 1990s, Matt drove Teddy Sheringham's Ferrari and picked his son up. My two questions were, when I read that, did you steal the car? And were you kidnapping the son? I hope there's no to both.
No. I'll do the very, very short version. Back in the late 90s, I worked for a children's holiday company, and his son, I think his name was Charlie, was actually there. He's probably about 13 or 14 at the time. Teddy had just gone to sign for Man United, and I think he just bought himself a nice red Ferrari. And he turned up at this this holiday place to pick his son up for the day. And I was looking after Charlie. So Charlie was one end of the estate, and me and Ted were one side. And I was admiring his Ferrari. And he said, "Well, as we're on a private road, do you want to jump in and we'll go to pick Charlie up?" And I didn't turn the opportunity down. So all true, and that's my claim to fame. But a lot of you probably won't know who Teddy Sheringham is, but you know what a Ferrari is, that's for sure.
I was going to try and see if I could get a picture of Teddy Sheringham in his Ferrari, but I didn't have time last night when I was putting the slides up. So, but maybe next time. Right, okay. Matt, over to you. I will see you in 20 minutes.
Thank you very much. And thank you very much, Tony, and good morning to one and all. So I'm going to give you a bit of an introduction into my world of commercial mortgages. Let me just move you around a little bit there. There we go. There's different strings to strings to my bow in regards to InterBay, and I'll briefly talk about it. But today, solely going to be focusing on the commercial side, which has just started to gain real appetite again after a bit of a sticky 2022. But we'll run through some examples and give you some ideas of how I can help and what your landlords are really asking at the moment. So we shall just a bit of an introduction to the bigger bank. Some of you know this, some of you don't. So apologies if you do. But the three brands within my company, and my company being One Savings Bank, my three brands are Precise Mortgages and Kent Reliance, which you obviously will know. And then there's InterBay at the end there. So a very specific business requirement from each lender, precisely the volume buy-to-let lenders and the adverse lender. Kent Reliance will do a bit more of the bespoke buy-to-let lending and also some residential stuff as well. And InterBay, right along there, We'll do any of the complex buy-to-let stuff that Kent Reliance can't handle, but we'll also focus on commercial mortgages. My role, I also cover the bridging side of the business within InterBay and Precise. As Tony quite rightly said, I have many caps. Today is firmly my commercial mortgage cap. So I'll give you an idea about the market. I'll give you my perspective of the market, what's happened at the back end of last year, what's happening at the start of this year, and the kind of appetite that we're seeing as well. So just going to rewind and give you a bit of a back history. InterBay have been lending on commercial for many, many years, and there's been a few hiccups along the way, one being a pandemic and one being slight change to the market conditions and swap rates going up and down like a low yo-yo towards the back end of last year, which caused a lot of disruption for commercial lenders. So this time last year, we had a really good offering, the best products on the market. We had the best loan to value, some really good criteria, and we did some good numbers of business. We had to take a step back a little bit towards the back end of last year to catch up. But at the start of this year, we've started to reintroduce some good products, some very strong criteria, and the uptake has been really, really positive. One thing I learned since my move from Precise to InterBay is the kind of landlords that want to start venturing into the commercial. So I'm sitting here talking to you as mortgage advisors, and I'm sure you'll have landlords that you do regular business with. The common theme that I'm seeing, and I'll mention this a little bit later on as well, with the types of mortgages they want, but the kind of theme from landlords is, what else can I do? You know, landlords have got their flats, they've got their buy-to-lets and HMOs and multi-units. Some of them might have even dabbled into holiday lets, which, as everyone knows, is a really good rental yield on it, but they're quite a bit of work, to be honest. But what about commercial and semi-commercial? And let's be honest here, that there's an awful lot of that type of property about. Unfortunately, the high street's suffering quite a lot, but from the inquiries I'm getting, there's an awful lot of suitable properties out there. And a lot of these inquiries come from landlords that might not necessarily have an awful lot of commercial experience. And I'll go on to detail about what an average landlord who's had no commercial experience can do with us. But it's just to give you some appetite to speak to your landlords and ask them what they want, you know, and which direction they want to go in, because it's a really good area. The rental yields are great, and there's a real growth about it. There might be some challenges in regards to valuations on commercial. We did some work with Ricks at the back end of last year talking about the commercial market. And while semi-commercial is quite strong because you've got the residential element, there might be some wobbles in the values of commercial properties. So high loan to values, we'll do high loan to values, but we have to be prepared that some valuations might come back a bit lower. Anyway, don't want to be on the negative side. I just wanted to give you my thoughts and observations about the types of conversations I'm having this year and the kind of appetite that I'm seeing from landlords. So just to confirm what I do, what Tony and Joe can speak to me about if you approach them. Two biggest areas of commercial and semi-commercial mortgages. We also do the stuff that Kent Reliance can't do in regards to complex buy-to-lets and the unregulated bridging finance within OSB. Precise Mortgages will do the vast volume of our regulated and fairly simple bridging cases. InterBay are now starting to do a lot more of the complex stuff, and we're looking to grow that throughout the year. I'm going to skip over the buy-to-let on here because I sent my slide deck over. This is just a standard one, but today I'm going to focus on the semi-commercial and commercial. And I'm going to talk about some scenarios. Rather than going knee-deep in criteria, I want to talk about some scenarios of the types of properties people are looking to buy, what can people buy, and what we can help with. And there's also going to be some concerns. So what types of properties are we going to have concerns on and why? So just some hard facts and data now. On both semi-commercial and commercial loans, we can lend up to 75% loan to value. Now, that sounds very simple. However, not many lenders will entertain commercial at 75%. Along with that, you can see just 2 bars down there, we can do interest only up to that loan to value. Now, that's always been a really key factor for us, especially with commercial. The challenges at the moment is costings. And if I'm thinking of my high street competitors, the Barclays, the Yorkshire Building Societies, and all the banks that do commercial lending, the regular feedback I'm getting is that they haven't really got much appetite to do anything on interest only, and they prefer doing it to SMEs and owner-occupier types of properties. So this is where the specialist commercial lenders come in. And there's the competitors that the other lenders I'm thinking about, Shawbrook, Alica, HTB. They're the main sort of lenders really that are in the same field as I am. So going back to my point in hand, 75% is a really, really good option for an awful lot of people, A, if they want to capital raise, and B, if they want to minimise the amount of money that they want to put in to purchase a property. Now, all subject to affordability. Look at commercial mortgages exactly the same as buy-to-let, and there's an affordability element as well. Now, the truth is, this time last year, I very rarely had to look at any kind of affordability calculator for commercial and semi-commercial mortgages because the rates were a lot lower and the stress testing was a lot easier. Now, very much the same as buy-to-let, it's a bit of a challenge on the high loan to values to get the affordability to fit. On our website, we do have, and it's a really effective calculator. And most of my questions are, will this fit? But fit as in affordability wise. So it's probably a very good idea just to check the affordability, just to see. And that's something Joe can talk through with you in regards to what the affordability might look like. It might fit at 70, it might fit at 75. But the main thing is there is an option for your landlords to buy commercial or remortgage commercial at a good, solid loan to value. Going along to the right there, investor or owner-occupier. So what does that mean? Is your landlord buying a property for investment reasons, or does their business run from it or will be running from it? I get an awful lot of these, and they can work very well. A couple of examples that I've had earlier this year, nice simple businesses. One of them was a hairdresser's, and it was the owner of the business had been running their hairdressing salon, if you like, for many, many years, battled through COVID and has got a couple of nice years books. The freehold of the building has come up for sale. Now, the freehold contains, I think it was a 2-bedroom flat above it. So now the challenge was the owner of the business didn't have any letting experience. They were a homeowner, so in essence, they weren't a first-time buyer. However, the rules slightly changed for owner-occupier. They don't need letting experience because they're going to be the business that's going to trade from that particular freehold property. So all we do is check the, we call it the EBITDA, but to keep it simple, just check the net profit from the last year and the rent from the flat above. If they can get the loan amount with those two figures, then we can help them. The other example was delicatessen and a convenience store as well. All owner-occupiers, all businesses that want to take that jump and purchase the freehold. And I think when they sat down and looked at the numbers, the rent versus the mortgage payments, you couldn't compare it. So it was a no-brainer to look to see if they could purchase the property. Happy to do that, and that's something Joe can talk to you about within Tony's team. We do an awful lot of them now. As I say, the key for where specialist lenders can help is that loan to value, and if they want to do it on interest only. That's very similar to commercial as well. I'll give an example of an owner-occupier on a commercial. I had a property that was pretty much a warehouse and a business that was making car components, I believe. They wanted to change to a new property, which was bigger. They were renting their current unit, and they'd done the maths, and they could buy it and move in on completion. As long as the building, if we're looking at commercial and industrial units, if they're kind of generic, this is the key for what lenders want. They want a generic kind of building. Why? Well, if we have to take possession of the property, is it something that we can easily sell on? Has it got a cross-market appeal? That's the key thing here. So I was able to help on an owner-occupier for someone on a commercial basis and someone on a semi-commercial basis, all saving the customer money, and it's a good asset for them going forward. Now, you can see the semi-commercial there, no split in residential versus commercial. Now, I believe an awful lot of my competitors have a different product banding depending on how much commercial there is in a particular semi-commercial block. So, for example, if you had a very large commercial premises with just a very small residential element to it, say, I don't know, 80-20 split, maybe they'd want that to go on commercial products because the commercial element was considerably bigger compared to the residential. Not with us, there's no percentage split there. So you could have a very tiny flat connected to a very large sort of a commercial unit, and that would still go on the semi-commercial rates. The benefit obviously there is the semi-commercial, the rates are generally cheaper than commercial, and that also means the stress testing would be more accommodating as well. So that's another big area as well. There is, I'll put in the reduction of fees. We are starting to get an awful lot of return customers now. And there's a slight reduction in the fees we can offer. It's always a good option for people, especially if I'm looking against competitors as well. In regards to the loan amount, and this is where it gets very interesting, and I very much hope all of you out there get multi-million-pound doors drop on your door every day, because we don't have a maximum loan, and we're very much open for business for multi-million-pound deals. There is some minimum loans, and I'll come on to the criteria in a minute. But please talk to Tony and Joe about any big deals you've got, because, for example, I'm just this morning, I've been speaking to a broker about a portfolio that a landlord has got, a mixture of commercial and semi-commercial properties. The total value is about £11.5 million, and we're looking for as much as possible. So in theory, we could go up to 75% there. It's all about affordability. So that's not too big for us, and it's just the one product. So I do hope that you do get these kind of big, bulky inquiries. We all do, actually, but that's nothing we shy away from. Bit of extra work for me to go to credit committee, etc., but it's all worthwhile. And this is where I work very closely and effectively with Joe and Tony to make sure we've got all the information we need and we can go prepared. So no maximum loan amount there. The minimum loan amount, and this is worth noting down if you do write some commercial, it's gone up and down like a yo-yo recently, and one of my competitors has just recently dropped their minimum loan amount today. Commercial and semi-commercial, the minimum loan amount that we can consider is £250,000. Now that's come down from slightly higher figures, and that's a reasonable level at the moment. Now, yes, we'd all like it to be what it was last year, and last year was £50,000, but I don't think we'll see that I don't think we'll ever see it again, to be honest. So £250,000. If your applicant, your landlord, wants to purchase a semi-commercial property, I should be able to assist if they are buy-to-let landlords already. If they have no letting experience, we cannot help with semi-commercial or commercial. If your applicant wants to purchase a commercial property, they need commercial letting experience. That's pretty much it, okay? On paper, it does say with semi-commercial, they want relevant commercial letting experience, but we are comfortable with people that know how to run buy-to-lets. So what would be a typical semi-commercial scenario, and what would be a very typical commercial scenario? I'm going to give you some good and bad here, just to give you an idea. On both the semi-commercial and the commercial, in fact, I think the next slide kind of shows this, yeah. On semi-commercial and commercial, two areas stick out for us that are still a concern post-COVID. Number one, our primary retail. So your high street, where, let's be honest, there's an awful lot of vacant commercial units there. I can still consider it. I can still talk to Tony's team about them. If there's a very good, strong lease, the rent's good, the loan to value is good, and basically everything's good about it. Generally speaking, on the retail side, it hasn't really fully recovered yet. Equally, office buildings as well. There's an awful lot of hybrid working and people working from home. And in fact, I'm seeing offices being bought and converted into residentials, an awful lot at the moment. So they are the two main areas, apart from some bespoke scenarios, which I'll tell you about now. They're the two main areas that we might have a concern with. But please still bring your cases forward and we'll have a look at them, because there's such an element of bespokeness to what we want to do. If everything adds up and it's a low risk for us, of course we'll look at it. What's a good semi-commercial? Well, I think in the last presentation, I heard kebab shops and things like that come up quite a lot. If your landlord approaches you with a property, a freehold property that contains a kebab shop, but it has a flat or flats within the freehold, usually above the kebab shop, I'm sure you can picture it down any high street, absolutely fine. And I also get this question a lot from brokers. Well, if you do that then, Matt, can you do the flat above a kebab shop on itself by itself? No, the answer is no. We're not going to. The risk is mitigated by us lending on the whole lot. It's a commercial valuation rather than a market valuation. So, kebab shop, convenience store, barbers, hairdressers, convenience store, late night opening, restaurant. Not keen on bars or pubs. Bless pubs. Pubs are having a bad time at the moment. So we're not one to consider that. But I'm sure Tony and Joe will find some options out there for lenders that can help on pubs. Anything exciting I can't help with, unfortunately, strip clubs and things like that. Anything that's, it's a general purpose building, which a general purpose building business can go in, where we're usually okay with. So that's semi-commercial. So just to reiterate on the semi-commercial, owner-occupier. If the business owner's got the chance to buy the freehold, brilliant opportunity. Or if it's investment purposes, what I will ask is always, what's the commercial lease? So if that kebab shop, they've got a commercial lease set up for, I don't know, say 18 months to 2 years, that's fine, that's acceptable. Obviously, we like it for longer. But on paper, we need 12 months on the lease at point of completion. And that's something to remind the guys about, to check we've got that in place. And as long as affordability stacks up and your landlord has got experience, we can consider it. Check the time. What about commercial? And this can vary an awful lot. And I do get quite varied scenarios. I got a football club recently. I had a brewery. Regretfully, I had to turn that down, even though I did ask to do a site visit just to make sure it all looked good. But it goes back to my point about a building or a property that is specific to the nature of that business. A brewery is a brewery. There's some hard machinery which is formed part of the building. If there's anything like that, so for example, if you've got an industrial unit and it's I don't know, a chemical business, and there's some really hard machinery that's wired into the structure of the property, we probably wouldn't lend on that. It all goes down to, if we have to take possession, could we sell it to anyone? Has it got a generic use? We like the out of town commercial and industrial parks. They're extremely popular. We're happy with most businesses there, and retail as well, as long as there's a decent commercial lease in it. So for commercial, the bigger the better, and they're generally millions of pounds. That's something that we can assist with there. Commercial in the high street, let's be a bit cautious on the retail. Restaurants, yes. Bars, no. We want to make sure that the high street as a whole is looking quite strong in that particular area. I can also consider hotels. Hotels, if someone is remortgaging, that's fine. We just want to make sure the business has been doing well. If your landlord wants to buy a hotel, then we'll obviously have to look at whether they're retaining the existing business within it and how well that's been trading, because hotels have been up and down a little bit, but they're generally a good bet for us. So there's a few examples of semi-commercial and commercial. It's not exclusive to what I've just said there, but there's going to be some really good examples that might just be outside of the lending sort of appetite. The rest of it stacks up quite nicely. That's where I think we can probably help. Now, I think that could be my time up. Oh, yes, because bridging, we're not going to go there. That's my whistle-stop tour of commercial and semi-commercial with InterBay. Yeah, I'd love some questions if that's all right.
Lots and lots of questions, Matt. Thank you very much. Let's
Pleasure.
just scroll down these. So Sadia has asked, if the client is an existing borrower, but through another limited company, are they still eligible for the 0.25% reduction in fees? So
That is a
the
great question.
director of limited company A, and they're buying another property under limited company B.
If the case came in, I would not say that we would recognise that straight away. However, if it was known to me, I would put the case forward to say, actually, the director of the business, especially if it's a mirrored like-for-like director and shareholder of the two limited companies, there's a very good argument there to say we should be given that discount. But on the face of it, no, because the legal entity has actually changed. But that's for something for me to work on. I'm sure there's good question.
Another question, but I think you answered that shortly afterwards about the semi-commercial no split. So that's been answered.
Great.
Paul Rhodes has asked, would you class a rented shop with a rented flat above as a semi-commercial or a fully commercial?
If the flat above has been sold off on a long lease and we are just lending on the commercial, that's purely a commercial. If the freehold contains the flat and the commercial below, then that's a semi-commercial all day long. It very much depends on what comes with the purchase. I do see from time to time people that have sold off the long lease of the flat, and so we can only lend on the commercial. Does that answer the question? Pretty
much. I think the other thing to take into consideration is if the access to the flat above the shop is through the shop, then a lender's
very good question.
Commercial,
correct,
because you couldn't really have a shop with the flat above and the tenant above. The only way you can get in is between 9 o'clock and 5:30 to access the property when the shop is open. So, but we don't see very many of those these days. So very few. Joe, who is in the office next door to me, Joe, by the way, is the head of my commercial team. That's the one that Matt keeps referring to. Hi, would you accept a semi-commercial property that has an Italian restaurant to the ground floor with a 9-room HMO above, but the client lives in one of the 9 units? It's a personal name.
Yes, absolutely. We have to determine whether that particular flat or room, was it a flat or room? It was a flat, wasn't it? We have to determine whether that particular flat is more than 40% of the overall space of the property. It sounds like it's going to be considerably less than 40%. If it's a, was that 10-bedroom HMO?
9-bed HMO.
9-bed HMO. Then that definitely sounds like something I can consider. Good on you, Joe. We'll speak later.
Close an email after you've finished, which is good. my team using the benefit of this to ask questions about cases. Now, Paul has made a comment, which is the minimum loan size of 250. Why is the north of England being ignored again?
This time last year, the north of England or lower value properties were not. I need my managing director on here for that kind of response, but it's a cracking option. And look, I'm based in Norwich, and I cover as far north as Nottingham and as far south as Oxford and Essex. Massive discrepancy. So I turn an awful lot down. There are some lenders that can accommodate £100,000 minimum loan, and maybe it will come down in time. The challenge we have, and I'll finish off with this last comment. The challenge we have, last year, we had an awful lot of the low value business, and we were pretty much the only lender that was in that space for £50,000. So it'd be a very different conversation if we were talking about 2 months ago, because our minimum loans were 500 and 350. So it's coming down. So who's to say? Honestly, I can't see us going down to 50,000, but it's coming down. So let's keep the faith.
Okay, if the competition come down, then no doubt InterBay will look at it again. But you don't want to be the only thing in town when it comes to 50 grand deals, because you will get quite literally thousands of inquiries for 50 grand.
Absolutely,
50 grand loans, 100 grand loans, and that affects service because you still got the same amount of staff, same capacity, and what you don't want is months turnaround times, that type of situation. So
Exactly right, Tony.
not being ignored, Paul. It's just at the moment they don't want it to affect the entire business, but it will come back.
Yeah.
I'm going to allow one more question. Harry has said, would you lend on a property with a restaurant on the ground floor and a flat above, but a pub next door, both restaurant and flat rented, owned in individual name?
Yes. The pub next door's got nothing to do with us.
Yeah.
So absolutely fine.
Okay. And Andrew's just made a comment. Nottingham is not north. Get to Durham and you're now in the north. Nottingham is north to me because my son was at university there and it used to take bloody ages to get there, 2.5 hours of time. So that was north for me. Matt, thank you very much. We are exactly on 11:55, which was our target. So thank you very, very much for your presentation. Simon will remove you from the room. As I always say, don't do it yourself because you could close down the entire event. And we will move on in a moment to our final speaker. And we have Charlie Gregory from Hope Capital. As you can see, nice picture of Charlie. I've got socks that are older than Charlie. I can guarantee it. I actually do have socks older than Charlie. But Charlie, don't let his like youngish looks make you think that he doesn't know what he's talking about, because he does. We've known Charlie for a long, long time. And I'm about to rip him a new something in a moment for something that his team have actually done, which you'll see in a moment. But anyway, so you should have received this from us this morning. It's Hope Capital's product overview. Have a quick read of that if you can. If you can follow that, absolutely fine. A little bit about Charlie. He's a BDM at Hope Capital. His focus is on providing brokers and their clients with fast, bespoke bridging loans. With years of experience in the finance industry, he has already helped hundreds of people achieve their goals. He has worked exclusively in bridging for several years and has built up relationships with brokers to help them provide bespoke solutions for their clients. His claim to fame, obviously, Charlie was voted the best looking in the year by his peers in the Year 11 yearbook. His mum's first comment when he told her was, "You didn't fix the vote, did you?" Charlie can always count on his mum to boost his self-esteem. Obviously, I'm not going to comment on that at all in any way whatsoever. I am, however, going to comment on the next slide that is coming up, which is Hope Capital's attempt at making Charlie and myself look like superheroes when it just makes me look like Fat Man and Robin, to be honest with you. So, yeah, nice one. I don't quite know how they've done that, but the wonders of modern technology, they can put me on to Batman. Anyway. Charlie, over to you. No pressure. I believe you've got about 7 of your colleagues watching at the moment, including your CEO. So absolutely no pressure whatsoever. Enjoy. And I'm going to go off and save Gotham City. So I'll see you in about 20 minutes.
Perfect. Thanks, Tony. Yeah, he definitely needs to get a new pair of socks if they're 25 years old, but that's all I'm going to say on that. Thanks for listening to me, guys. Obviously, I know I'm the last presenter of the day, so hopefully I won't overrun the 20 minutes because I'm sure you've all got stuff to get on with. As mentioned, I'm Charlie Gregory. I'm the BDM for Hope Capital, covering London and the South area. I just wanted to give you a quick Hope Capital overview. We are an established lender that have been lending for over 10 years now. Our head office is based up in Liverpool. I live down in Surrey. We've got staff all over the country, so we've got feet on the ground all over the place. We have a minimum loan size of 50,000 and a maximum loan size of 5 million. All of our lending is on a first charge, unregulated basis only, although we can also consider second charge as a cross charge with a first charge as well. We lend all over England and Wales. We can also consider lending in Scotland. Ideally in Scotland, none of the rural areas. So we're looking really for the city centre locations such as Edinburgh. Short-term lending, quite standard, 3-month minimum term with an 18 months maximum with a minimum interest period of 3. We do straightforward purchasing for acquisition only, but we can also do refurbishment and development as well. We're not quite we haven't fully launched the ground up space just yet, but it is something that we can consider on a case-to-case basis. But the reason I sometimes mention development loans as well is that, for example, I'm doing a commercial unit at the moment being converted to 17 flats. So it depends who you ask, because you could class that as development in its own right. as I mentioned, purchase and also refurbs as well. So light, medium or heavy. So if it's a light refurb and it's just a tartan turn kitchen, bathroom decorating, through to medium and heavy projects as well. We can do refinancing, rebridging as well, added value or below market value transactions. So we see a lot of people who, for example, might want to buy a property on an option agreement for X amount, get planning on the property or refurbish the property, and then they want to exercise the option agreement but lend against the new and improved valuation. That's something that we can consider. Any legal purpose and unregulated purpose for capital raising is also considered on a case-by-case basis as well, from people wanting to draw out equity from their assets. We have a number of different payment options as well, just to give extra flexibility. Deducted is the most standard one that you guys, I'm sure, are used to, where all the interest is deducted day one. We have got rolled interest as well, where interest is compounded. Fully serviced deals as well, where clients will have to pay a certain amount per month, but it just means that they're optimizing the net figure that they get day one because the interest is not deducted up front. Sometimes as well, clients want to do a part and part option where they haven't quite got the net loan that they want, but they don't want to fully service the deal. So if they want to do a 6-month deducted and 6-month service, that's something that we can consider as well. We have got a flexi product, which is quite unique to us. So I can go into that in a little bit more detail outside of this call, but it's effectively where we can stipulate how much the service amount is going to be per month. So if your client comes to you saying, this rental property is giving me £1,000 per month, that's all I can afford on a service amount, we can stipulate how many months we deduct to make sure that they're not going to exceed that £1,000 limit that they want to. So put on here our total product range. We've got 2 new exciting products, a bridge to let product and a term to rent. I'll go through those in a little bit more detail on a later slide. But then our core aspects of our lending: residential, semi-commercial, commercial, land with or without planning as well. Our headline rate at the moment for residential bridging is at 0.72% per month. Apart from the bridge to let and the term to rent, all of our bridging products are fixed rates. So they're going down an absolute treat at the moment, with a lot of lenders being at variable rates, where you just can't guarantee to your clients what their interest rates are going to be, because obviously it's variable. So all of our products are fixed, and they're fixed for the duration of the term. So the key thing when you think about bridging finance, in my eyes anyway, is the need for speed. I've spoken to Tony about this on previous presentations as well, and we get asked a lot, truly how quickly can you complete on a deal? You probably get bored of everyone saying to you, we'll complete this within 2 days, 3 days, within 24 hours, because a lot of the time it's down to third-party aspects that are just simply outside of our control. How quickly the brokers you guys are in providing information, how experienced and quick the client is with providing information and getting stuff sorted. And the key thing is obviously the client solicitor. If the client solicitor is just not used to bridging finance, then they can cause massive delays in applications. However, there are also sometimes things within our control that we can ensure that we do to maximize the speed aspect. So AVMs is something that we do a lot of. So alternative valuation methods up to 70% LTV on residential properties up to 750. They're free and they're instant. So on a Monday, if the application comes in the morning, we can get a valuation done and returned within 5 minutes even. Desktops are up to 75%. So if a client wants to go a little bit higher than 70%, we can do a desktop valuation. This is again on residential properties up to $1 million. So again, we're opening the market up a little bit more, going up to $1 million. Equally, well, they're not equally as quick. They take 2 to 3 days, but they're a lot quicker than what a normal standard valuation would be. And they take within 2 to 3 days. So if the application comes in on the Monday, come Wednesday, we should have the valuation returned to us. We can also go up to 2 million. So between 1 million and 2 million value, up to 65% on a desktop, because we understand that there's still a need for speed at the higher end of the market as well. Full title insurance on all residential loans up to $1 million, and also commercial and semi-commercial deals up to 500K. So if you're not familiar with title insurance, forgive me if you are, it's a little bit like no search indemnity. We basically give a minimal list to our solicitors in regards to the searches and all the acquisitions or requisitions they need to undertake, which just means that it goes through a lot quicker. We're not waiting for any searches that can take a long time to come back because we're fully covered on title insurance. No legal undertakings we can consider as well. So there's no upfront legal undertaking, should I say. Again, that's not necessarily a speed aspect, but a lot of the time your clients, don't want to upfront cash. So where it's not being upfront and we don't ask for an upfront legal undertaking, that can sometimes just be the cherry on the cake. Dual representation is a massive selling point for us at the moment. A lot of unregulated lenders want to offer dual representation, but they simply can't work with solicitors through solicitor compliance issues or even lender compliance issues in the unregulated space. But we have a firm that we work very closely with who are a reputable firm that from a compliance aspect are happy to work with us, and from a compliance perspective from us, we're happy to work with them. So there's no blaming the client solicitor if they're being slow, because obviously if it's the same firm working on it, it's a lot quicker. At the moment, it's just for auction purchases, because we understand the need for speed is more apparent in auction purchases when they typically have, it's normally within sort of 30 days they need to exchange and complete. So that's something that we can offer. Refurbishment criteria. So again, when you think of bridging, it's the speed aspect, but normally there's also an element of refurbishment that clients want to undertake on their acquisitions. So refurbishment and development is available on all of our property types, which again is a great selling point. Some lenders only want to restrict refurbishment on residential types, whereas we can do refurb on residential, commercial, and also semi-commercial as well. Put on there, this includes change of uses, permitted development, extension, HMOs. We're seeing a massive increase on HMO inquiries at the moment. A lot of developers say going to auction to buy a 3-bedroom property, they want to extend it or convert it into a 4-bedroom property to really optimize their rental return. So we're quite happy to help with acquisition costs and also refurb costs to get it into a 4-bedroom HMO ready to exit into a term facility. We can also lend to inexperienced borrowers as well as experienced borrowers. Obviously, everyone has to start somewhere. A lot of term lenders aren't as keen to lend to inexperienced borrowers, especially on a refurbishment aspect. Some lenders would prefer the borrower to be experienced, whereas if the contractor is really experienced but the borrower is slightly more inexperienced, we can consider those types of applications. We can offer 100% bill costs funded in arrears. So all the client needs to do is spend money on the first tranche. We'll go out, check what they've done, and then give them 100% funding thereafter in arrear. Light, medium, and heavy refurbishment considered. We've changed recently how we class light, medium, and heavy refurbs, which is a lot easier for everyone to understand. It makes my job easier, and I'm sure it makes your job easier. A light refurbishment is effectively 30% or less cost of works versus the current value. Medium is between 31% or anything over 30% to 100% would be a medium refurb. And then heavy is basically everything over 100%. Finish and exit. So finish and exit, I'll start off with, is something that we're seeing quite a lot of. I'll probably say off the back of COVID as well, this was something that was a lot more apparent. With delays through materials, with delays through workforce, borrowers were just not finishing their properties as quickly as they wanted. So I've put on there suitable for wind and water type properties and refinancing current lenders, including bridging finance. So if someone is at the end of their term or coming to the end of their term with this existing provider and they're not able to give them any more time, or they're not able to give them any more money, we're more than happy to come in and rebridge that and look to help them finish the property to then exit on time. As I mentioned, wind and water type properties only really. If it's not wind and water type, we're classing it more as a ground up part complete development. What we can also do as well is if it's slightly lower LTV, so say the existing debt is 60% with the current lender and there is still work left to do, we're more than happy to redeem the existing lender and also look to give them a little bit extra to go towards that next tranche. So they don't necessarily have to have that money in the bank, and they can use some of the equity in their property to carry on finishing that security. As I mentioned, the remainder of the FERBs are taken on a drawdown basis in arrears. A development exit is also something that we're seeing a massive increase on. Again, maybe in the current market conditions, the market's slowing down a little bit from a selling perspective. So, and also from the development perspective, with delays through market materials and workforce, we're seeing developers come to the end of their term with the existing development finance lender, and they haven't got enough time to sell the properties. Now, there's two options: one where they reduce the asking prices of those assets to sell them in time, or they can refinance it, get a brand new 12-month term, which means they can really optimize how much they sell them for and optimize their profits. We can also capital raise as well for development exits. This would be for slightly lower LTV, so we wouldn't go up to the full 75%, but we can capital raise, because a lot of developers, when they finish properties and they're on the market, they're already looking for their next opportunity and their next project. So we can clear the existing debt, raise a little bit more money for them to go on to their next project, and then help them exit our facility through sale or refinance, worst case scenario. So these are our two new products, which I think are only about 3 weeks old now. The bridge to let product and the term to rent. So the bridge to let is effectively a 12-month bridge, which is then followed by a 24-month service term. The reason we've introduced this product is we saw a need in the market where a lot of clients were quite apprehensive about getting involved in bridging finance because they wanted assurance on exit. And I know you guys can do as much work as you can on the exit, but you can never assure a client that they're going to exit that property. So the bridge to let basically just gives them that backstop where if they don't exit within the 12-month bridge, or they can't find a term lender to exit onto a term facility, we can put them onto a 24-month service term, which just gives them a little bit more time to sort everything out. It's underwritten as a standard bridge as well. So there's no credit scoring, there's no quirky criteria requirements or minimum incomes. It's a 2% arrangement fee on the bridge. And then to switch to the term, it's a 1% arrangement fee, and there's proc fees paid on both of those. There's no ICR calculations as well. So a massive selling point in the current market is ICR calculations or not having them. It's purely done on a serviceability basis. So it can be employed income, portfolio income, rental income from the security itself. But there's no rental calculations, which is a massive selling point. The term to rent product is effectively the let product of the bridge to let. They just don't want the 12-month bridge and they want to go straight onto the 24-month term. So that's something that we can offer as well. Same criteria stands on that product. I've put both of the products on there, and you can see, if you can, sorry, it's a bit small, but we've got variable rates on our products, and we've also got fixed rates, and that's across resi, semi-commercial and commercial. Our rates are obviously higher than what term lenders' rates are at the moment, simply because that's not the market we're trying to target, and we're not trying to compete with them in that market. These products are very different, with no ICR calculations, no stress testing, no quirky pieces of criteria that they need to meet with minimum incomes. And it's all short term again. So it's a 24-month term with 12 months minimum interest. So it's the short-term lending aspect of it. Again, they're not tied in for 5, 10, 20, 30 years. So I thought I'd just put these two products on here and just briefly speak about them, land with planning and land without planning. Land with planning I mentioned before, sort of ties in with land without planning actually, but I mentioned before, a lot of people have or go through option agreements. So buying a piece of land for 200,000 on an option agreement, they've got 12 months to exercise that option agreement. They then go and get planning on the land and want to exercise the option agreement for the 200,000 that they're purchasing it for, but they want to lend against the new and improved value with the benefit of planning. So we're more than happy to lend against the new improved value. Land with planning up to 60%, land without planning up to 50%, because it's a slightly higher risk product. we do ideally want the land, or we look for experienced developers who know what they're doing. Maybe presidents in the local area, if there's any similar projects or similar pieces of land that have got planning, and also if it's got lapse planning. If a land without planning has had previous lapse planning, that also gives us a little bit more comfort to lend. So other USPs, I've touched base a little bit on inexperience, so first-time buyers or first-time landlords, or even first-time refurbishment, which is what I spoke about. We're more than happy to lend to those types of applicants. And again, once they've done a couple with us, it then opens them up to the market, because they wouldn't necessarily be branded in that inexperienced bracket anymore. A lot of developers or clients don't understand or haven't considered using additional security as well for 100% finance. So we can lend 100% of a purchase price of a security if a borrower offers an additional security within their portfolio. That can be on a first charge basis or on a second charge basis. But a lot of clients don't think that that's something they can do. So they literally don't have to put much money in at all and can get 100% purchase on a new property acquisition. Expats, foreign nationals, so lots of different types of borrowers. We lend to individuals in their personal name, limited company names, complex structures as well. So we can consider trusts on a case-by-case basis. We lend against SIPs and SASs, so pension schemes. So all different types of complex structures we can look to consider. No credit scoring. I mentioned that before, which is a great selling point. I know when I used to work at a term lender and the underwriter would say to me, it's failed the credit score. And I was like, what does that mean? And it's an accumulation of about 15 different points. And the automated system says it's not met the credit score. For you guys, it's so hard to explain that to your client because there's not a defined reason. So there's no credit scoring with us. And that's both on bridging and our 2 new products as well. Adverse credit considered, and I've put it on this next slide here. Again, we've seen a lot off the back of COVID where people were just in, unfortunately, sensitive situations where they've had adverse credit, and that could be anything from missed mortgage payments, CCJs, rolling arrears, or even bankruptcies. As a whole, we lend to any type of adverse credit on a case-by-case basis, because obviously some of it's a lot worse than others. But we're seeing a lot of people that maybe have got adverse off the back of COVID, or obviously a little while ago now, but more recently, they can't get term finance, or the only term finance providers are the really expensive lenders that are basically utilizing the fact that they've got adverse credit. So what we do is we can step in for 12 months, let them basically clean their credit profile. At the end of that term, then they open up to a lot more options in regards to term lenders, and not those really expensive term lenders that are just looking at them as adverse credit clients. That's pretty much it from me, I believe. Yeah, thank you very much. Hopefully I was within the 20 minutes.
22, Charlie, but still, not going to quibble over 2 minutes. So thank you very much. Very informative. I've learned a couple of things there, and I need to speak to you on a deal after we've finished.
Happy days.
Okay, a few questions. Sadia's been typing away. I can see there's 4 questions from Sadia, which is: land with planning, can AVMs be done?
Unfortunately not. That would be great.
Yeah.
AVMs, yeah, we use a system called Home Track, and it's an automated system which basically takes like averages in the area. So it's really for residential assets that have got comparables, because something like that land is hard to value on a normal day, let alone through an automated system, unfortunately.
Okay, so I won't get Charlie to answer the question about arrangement fees and upfront fees, because that's on the criteria that we've sent you earlier this morning. Otherwise, there's various bits, and it'll be here for another 10 minutes, probably just going through each one. So, and Sadia's then asked, are development exits bridge or term deals?
Are development exits bridge or term deals? They can be either a bridge or a term deal, to be honest. It completely depends. Obviously, on a bridge aspect, you're probably looking more for selling the properties. So if they've just ran out of time with their existing lender, then we can give them a fresh 12 months to sell and sell for the values that they're trying to sell for. But if they want to flip those onto our term product for 24 months, we can do that. Our term products just need to ensure that they're income producing. So we can do both on that basis.
Okay. And Sadir again has asked, does the land with or without planning have to have a minimum value, or do you need a minimum loan only?
Yeah, so we're looking on land deals at a minimum loan of 150,000. So not necessarily a minimum value, because it could be 150 on £1 million land value or 500 grand value.
Okay. Chelsea has asked, would you do a residential that would be knocked down and rebuilt?
So that would be the ground up product, which we haven't fully launched, but we are doing the odd few deals like on a case by case basis, because it is a market that we're sort of looking to go into. So by all means, if you've got the details and it's a deal that stacks up and it makes sense, we might be able to consider it for you. I think our sweet spot in that area is going to be up to 5 units. So if it's anything greater than that, we might struggle.
Okay. Will has asked, I'm based in Shropshire, SY1. Who is my BDM contact, please?
That's a good question. I think it will be Sam Lee.
Okay.
So we can send those details out.
Well, we'd love the business to come through us because we get package status with Hope Capital. So therefore we can pay you the same as if you went direct.
Tony's your BDM.
You'll consider that, and then Charlie gets the benefit of that, obviously, because he's our BDM. So I'm sure he wants all the business to come through us. We've no other questions from any of the delegates. I was actually going to ask one question. AVMs, when it comes to AVMs and it comes to flats, do you have separate criteria for flats, or is it the same criteria for all?
No, it's the same. So at AVMs, we just can't use like multi-unit blocks.
Okay.
So if it's a flat, but it's all on one title, then it would need to be a valuation or a desktop on an exception basis. But an AVM would have to be like a single leasehold flat.
Okay. Delegates, that's quite unusual because a lot of lenders do have restrictions in place on the type of property. So, I mean, some lenders won't allow an AVM on the next council property, for example. Council flats are a definite no-no for many lenders. And we do have some that say flats, no, it has to be freehold house, detached, semi-terraced. So that's very, very useful. Very useful.
It's all based on the confidence level as well, obviously, because if it is quite a quirky flat or it's in a quirky area, it might just not get the confidence level. But if it doesn't make the AVM confidence level, or we can't get a valuation on it, we can always look to do a desktop, which again is very quick and cheaper.
Charlie, that was great. My socks, by the way, were purchased in 1989 for when I went skiing, and I wear them occasionally when it's very cold. Not today, because we do actually have heating in here, but that's why I've still got them. So, but then those socks are probably older than about 40% of the delegates today as well. So that's the reason why. Charlie, thank you very much indeed. Simon will remove you from the room. Don't try it yourself. You could shut the whole thing down. Okay, so I always start off a little bit about what's happened recently in the marketplace. Some of the things that are going on, some things I hear because I'm fairly well connected on things like the what they call the AFB, which is the Association of Finance Brokers. We meet fairly regularly for various meetings, and I find out from Robert Sinclair, who's the chief executive of Amy, what's going on in the marketplace, and also from the contacts I got within lenders who can let me know what's happening or what's not happening in the case of EPCs. So new for 2023, I did mention this last month, but this is still going, and we're expecting actually from Castle Trust a new bridging product for light, medium and heavy, which we did have one to 90% before things went crazy last year. It's currently 80. We're expecting some movement on that fairly soon, and we've still got some 75% stuff that is cheaper than the Castle Trust competition, purely because of the volumes we do with them. We are a major supporter of Castle Trust. So there will be some stuff, and you won't see this on the sourcing systems. There will be some stuff that we can get through that you would not be able to get through anywhere else. Also new for 2023, if you check your email once we finish today, you should have an email regarding this. West One have launched a rental coverage requirement, or as I sometimes call it, the DSCR, of 100%. So rather than the 125% that you quite often will see as a minimum from lenders, this is 100%. Rates were reduced a couple of weeks ago on the 17th of February, 3 weeks ago. And we are an accredited packager for West One loans and can provide a quote to you within 60 seconds. We are finding, unfortunately, that certainly with one of the sourcing systems, their whole system seems to have corrupted, and it's chucking out, for example, it will chuck out a, let's try and think of one, a Kent Reliance result, and then when you try and download the illustration, it comes up with a LandBay illustration. So we don't quite know what's wrong there at the moment. Our system, which I'm going to talk about a little bit later, is that doesn't happen, quite simply. So West One, check your email, have a look, and then give us a call if you've got anything. Have a look through your cases you've declined in the last 2, 3 months, 4 months, because if any of them because of rental income coverage, you might be able to place these now, and rates I'd say have just fallen. Other things to mention, I can't obviously mention who the first one is, but Package Estates is new lender launching hopefully very, very soon, and we're going to make a big song and dance about it when they do. And I've given you a little bit of a teaser on their logo. Just been given package status with Tandem. That's been announced, and as of Tuesday, we were given package status with the Dudley Building Society. So just look out for those as well. We'll be sending you details through. A little bit new. This is later on, so I just want to give you a warning on this, because if you leave the event early, you won't be able to download any of the documents. So rather than asking you to put your name in the comments to download stuff, you can actually download them yourself very, very simply. So all the GDPR documents I mentioned earlier on, our product and commission and prop fee guide, and also the link to watch the Sutton, the specialist with Roger Morris that took place last week, is all there. There will be, you see that little click here to leave feedback and download giveaways. Don't click on the screen because it doesn't work. It's a slide, but that will appear a little bit later on at the top of the screen. So just look out for that. When you do click on it, though, you will leave the event. Just be aware. And I mentioned before, I'm going to mention it again because there's a few people that have joined us late. Roger Morris will be covering again EPC's The Real Story fairly soon. We're just trying to get some dates organised because he's a very, very busy man at the moment. Just basically what is really happening with EPCs rather than the stuff that we're being told in certain parts of the market. So register when you get the email, register early because we're limited to 100 places. Consumer duty. Oh, well. I've recently, it was last week actually, I went on a 2-hour seminar that was run by the FCA, which, if any of you have been at a seminar run by the FCA, is about as depressing as it gets. If you're directly authorised, if you're an AR, this will indirectly affect you in many ways. If you're an AR, you know what's coming, hopefully, because it is pretty horrendous. I've just highlighted a couple of things there. Cross-cutting was a term that they like to use. I did actually go to the Oxford English Dictionary to see what it meant, and it doesn't mean anything like what they're actually talking about. I see where they're coming from, but it's still, as usual, the FCA tell us we have to communicate things in plain English. Unfortunately, they seem incapable of doing the same. And the 4 outcomes rules, consumers receive communications they understand. I won't read them all, but I've highlighted one: offer fair value. This is the way they now start to attack the income that we receive on cases. We have to justify, all of us have to justify how much we earn from borrowers. Now, unfortunately, I can't think of any way where we can charge clients by the hour at the moment, or by the 6 minutes like solicitors do, because we have to give over a KFI or an ESIS that says these are our charges. How we can justify, I don't know when a case comes in, how long it's going to take us, how difficult it's going to be. What's going to be involved, you never know. We can't see into the future. So until someone actually invents that time machine where I can go forward into the future and see, yeah, that one took us that long, therefore, Mr. Clark, we'll charge you this, then I'll probably be fine. But this is the start. Expect commissions to be one of the things they then attack, that we shouldn't be receiving commissions and fees as well. That's where this is going, in many, many people's opinions as well, not just mine. One of the things I did pick up from the seminar, this is how when they do a compliance visit on you, this is what they now look at. They call it SCAR, probably because you'll be scarred for life after a visit. But as you can see, I'm not going to go into too much detail on this at the moment because I could probably talk for an hour on this. They require information, all the management information you collect, to be seen, challenged, analysed, actioned and recorded. Maybe just write that down. And because it might prove useful in the future, because I'm going to cover this on a future event in probably, hopefully, in some depth when I've got a better understanding of it myself. This is one of the things that came from this 2-hour seminar, which paid 85 quid for, by the way, and there was about 70 people there, and they were doing a number of these. I don't know how they can justify that cost, but obviously they're the FCA, they can. And hopefully that will come up. Appointed representatives, if you are an AR, you'll know what's going on within the market at the moment and the chaos that the FCA are causing with their requirements from networks and all the different bits. We're already seeing, I'm getting ARs contacting me and saying, I've had enough. I really have. I've had enough of what's going on. How can I continue to do business? And it's very, very difficult at the moment. I'm expecting many ARs just to say, do you know what? I've had enough. I'm gone. I'll retire, go and do something else. All fits what I always believe the agenda of the FCA is, to drive as much business to their new employers when they leave the FCA. I'm talking about the directors, of course, because so many of them then go on to the big banks and the merchant banks who they've been actually looking after, or they've been overseeing for many years. They've then gone to a 7-figure salary. It shouldn't happen. It does. Unfortunately, it's the way of the world. But AR's massively under attack. And also, the FCA themselves are facing a crisis. This was from, I found this on the internet yesterday, from Proactive Investors on the 1st of February. Not much since. It's been a little bit quiet with what's going on with the FCA. I don't know if they caved in and given the FCA staff their bonuses that they so richly deserve. But as you can see there, over half of the staff are considering leaving. And this is from the entity that regulates financial services. If half of my staff wanted to leave in the FCA, I would have to tell the FCA. They would probably have a field day with me. But this is our regulator. If you get a chance, just write this down. Type into Google, "What is wrong with the FCA?" by Gina Miller, who became famous during the Brexit back into Brexit 2016 because she was doing various heights. I'm not a massive fan of hers because I think she just caused more chaos. But it's a very good article. Basically, the one point that stood out for me was that if the FCA was a lender or a broker, they would have shut themselves down. Have a read. It's quite interesting. Okay, some information about us and what we can do for you. This is a little bit, obviously, today you're attending, you're seeing 4 lenders speak, who all of which we use on a regular basis, all of which we would have packager status at least with them and be writing a lot of business with. So we can help you get more business through. Sometimes, it's like you go to a new lender, you don't know how the way they work, you don't know the people you're talking to, and getting that deal through can be an absolute minefield sometimes because you never know what mine they're going to lay in front of you next to blow the whole thing up. So this really, to start with, for those of you who don't know who we are, or those of you who've never heard me speak before, this is just an idea of how we are considered in the market. So this is the NACFB. I'm going to just very quickly run through two compliance visit feedbacks that we got. As you can see there, in reality, I do not see what you do as moving the goalposts, more a case of better than best practice. The guy told me you're a country mile ahead of everybody else that we've seen when it comes to compliance because you actually get it. You don't have people involved in this who don't really understand financial services. And that's the problem with a lot of compliance people. I find that they don't actually understand the products that they are overseeing. And that is the issue. Whereas we do, I cover our compliance. It's an absolute pig of a job at times. But because I've been doing this a long time, I understand what's involved. I would never employ a compliance officer unless we got to a stage where I have to, because I can quite easily cater for it myself. But it is a minefield, as we all know. And then the next one we have had another one since, which I've not put the slides up yet because I've not got to actually copying it over. This was in 2020, just before COVID. As you can see, we identified no gaps in compliance to regulation and identified areas of best practice, notably in anti-money laundering and data protection controls. Makes it great when we actually we have a lender that says we want to take you on. We need details of what your AML and data protection is. I can just send them this because this has already been done by the NACFB. So what we offer, quite simply, a partnership. One term I hate in this industry is master broker, because it sort of gives the impression it's not a two-way relationship. It's that's sitting on our pedestal, taking all the money, and you're sort of sitting below us and doing all the work and not getting much of the benefit. It is about two entities trusting each other, and it is a partnership. I see you as a broker partner, not as an introducer. We want to make sure to help you grow your business in any way you possibly can, be that with help with marketing. And we have some brokers now where we will do marketing on their behalf to their customers. We can do that quite easily because we've got the capacity to do so. Doesn't matter what your status is. I'd be very careful if you're not authorized, quite simply because our PI cover will not cover certain aspects of certain introductions that are from a non-authorized entity. But we do have solutions. I'm not taking on ARs because of all the problems that the FCA is causing the industry. But the vast majority of the people that place business with us are directly authorized. And we want to make sure you stay compliant, informed, hence the reason why we do these and we send out the GDPR bits and other bits, ensuring you're writing business indefinitely. My business is no good if I haven't got any broker partners. It's also no good if I haven't got any lenders, but the main thing is broker partners. I need you to get that deal to me in the first place, and you need us to get that deal out the door at the end. Our products, everything that you can imagine except for equity release. Don't touch equity release. It's not really our bag. We have no expertise in it. So therefore, it's not something we're going to offer. And our service, packaged or non-packaged, or introduced only. So we give the advice, you give the advice. Doesn't matter what the product is. If it's an unregulated buy-to-let, we still treat it the same. Are we speaking to the customer? Or are you speaking to the customer? You choose. It's not one or the other. You can mix and match it. You can have buy-to-let cases. You want to give the advice. You can have second charge cases where we give the advice. Entirely up to you how you want to work it. You just let us know on each case. And why are we different? It's not the products we offer. In rare cases, we have products that are either semi-exclusive or exclusive to us. So, but in the majority of cases, it's exactly what's available in the market. It's the people we employ. Quite simply, to get through the door here at Specialist Financial Services, they have to have a minimum 5 years experience in the market, not 5 years experience as a cashier at Nationwide or 5 years experience doing something completely different. It's 5 years hands-on experience doing what we do. Reason for that, quite simply, do you want to be speaking to somebody who really doesn't know what they're talking about, who's still learning on the job? And we all learn on the job. There's stuff I learn every single day. But the vast majority of what I need to know in this industry, I know because I've been doing it so long. And the same with my staff. I've got staff that have been doing it since 1995, 1997, and they know their stuff inside out. And the main thing is mature with life experience. That is something that money can't buy. To have people who actually know how to speak to you, to speak to your customers if we're giving the advice, is absolutely paramount. I can't stress that enough. To have somebody just out of university who really hasn't got that experience, I have found in the past has just turned into a bit of a nightmare. So it's not something we do. I only employ people, I suppose it could be classed as discrimination, but I need people who've got that 5 years experience, first of all, and have the maturity. And on the rare occasion that something goes wrong, my staff are experienced enough to actually realize it's gone wrong and deal with it rather than not know because that experience isn't there. So that, again, very, very important. That's why we've had no complaints at all in the last 6 years, other than lenders are too slow. That's the only complaint we ever get. If you want to check out our Google reviews and our Trustpilot reviews, please have a look. I was looking at them yesterday, and they are, some of them, or most of them, are astounding. They really are. And why are we different? Our lender relationships. I've been doing this a long, long time. I know pretty much, I believe, the senior board at every lender that has presented today, every single one. And that's because of how long I've been doing this, because people tend to, our industry it's a big industry. I hate to use the word incestuous, but it is a little bit in that people don't tend, once you're in, it's like the Hotel California, you can check out anytime you like, but you can never leave. People tend to stay in it once they're in it for whatever reason. So lender relationships absolutely paramount to us, something that I nurture very carefully and very closely and ensure that carries on. How seriously we take compliance and prevention of financial crime. Not our numerous awards from the press. As I announced last month, I would no longer be slagging off the awards system in this country, in the UK, through the financial press, because I think most of you now know either what my views are on it, or you've got your own views anyway, because it is as corrupt as it gets. But I'm not going to talk about that anymore because it's a waste of time. What else can we offer? Now, when you first deal with us, when you first call us, you're allocated an underwriter, and quite often you'll choose your own, I say underwriter. They actually got to call them loan partners. You're designated the person from start to finish. So they would deal with your case from the outset all the way to completion. So there's no sales departments, underwriting departments, processing departments, completion departments. And every time it goes from department to department, a little bit is lost on the case because you can't pass over all the knowledge you've gained on the case to somebody else and then somebody else and somebody else. So we find that way works best. The only time someone else gets involved is me when I pay you your commission, or me when we have a particularly difficult solicitor dealing with the back end for the client, or sometimes even the lender. So I will then get involved. No commission clawbacks. It's rare that we get a commission clawback. We don't pass that on to our broker partners. What else can we offer? We have direct access, and I can't tell you how invaluable this is to both Equifax and Experian. So it means when an inquiry comes to us, as long as we got the client's okay, basically we got that okay right at the outset, we would do the search. First thing we look to do, the reason being, as you all know, clients sometimes lie, don't tell the full truth about, or sometimes don't even know what's going on with their credit report and what they've got against them. So we do that. So we're not initially doing loads of work, going down the wrong road. You're doing a load of work, going down the wrong road. And then we then find out when the lender does the search that, hang on a minute, this guy's got 3 CCJs he didn't tell us about in the last 6 months. and we have to start all over again. I hate wasting time on cases which basically need to go in a different direction to what we originally thought. So this is something we do right from the outset at our expense. It's far easier for me to spend £3 in a search than it is for one of my staff to spend 5 hours on a case. And believe me, I don't pay them £3 an hour. Wish I could. What else can we offer? And this is something we've done for a long, long time. We developed our own in-house software. So Loan Quote is for our second charge business and also the regulated first charges. Commercial Quote covers all our commercial lenders and all our specialist buy-to-let lenders, many of which do not appear on the sourcing systems that we mentioned earlier on. And then we launched Bridge Quote, which is fairly unique in the market because I don't know if anyone else has got a sourcing system for bridges out there. All of these are updated immediately. As an example, today we've had Shawbrook and Foundation have amended their rates. Before I started today, for today's event, I updated Shawbrook, and then during the first speaker's presentation, I updated Foundation. So my staff are already dealing with the live rates as of today. I don't think you can say the same probably for Mortgage Brain, 27 Tech, and Trigold. In fact, I know you can't. Our second charge panel, I'm not going to go through all those, but we deal with everybody. Quite simply, every lender in the marketplace we deal with and have done for some time. This is the L&G Mortgage Club second charge panel. As you can see, if you use the mortgage clubs, which probably give you no support on second charges whatsoever because they don't know what they're talking about. We know that because we have actually asked them questions in the past to see what they're like. L&G, Shawbrook and UTB. Wonderful. Simply Biz is slightly more in that they've got Central Trust as well. But as you can see, and if I just go back, actually, you go back to the L&G one, still have Marstaven and Precise up there. Now, Precise withdrew from the second charge market months and months ago, and Marstaven was well over a year ago. And as for Simply Biz's, Paragon pulled out in 2021. So they're still advertising stuff that hasn't been available for over 2 years. So we have every lender in the marketplace. If you want to give your client the best possible options, then give us a call. How you can advise on second charge. So if you want to give the advice because you don't want to go through a company, a master broker, that's going to be charging your client £5,000 and giving you probably 25% of the proceeds, we can give you access to every lender in the marketplace, do the sourcing for you using our Loan Quote software, help you with your file compliance so you can show the reasons why it was the best option for the client at that time. We instruct the surveys on behalf of the client if one's required, issue consent if it's required because there's a restriction at Land Registry, package it all up, pay your income to you on the day of loan completion, no loss of control, and we don't charge a packager fee. And we also, on deals over a certain size, we pay away part of the prop fee as well. So you get the best of all worlds when it comes to second charges with us. We can either give the advice or you do it and you don't lose out. If your business model is £395 completion fee, that's where you can keep it. That's what you can do. It doesn't break it's flexible enough that it actually fits in with you. It's not to fit in with us. Our package regulated first charge panel was increased recently, so we're now up to 9. We deal with a large number of regulated lenders, as you can imagine. We deal with all the high street, but of course there's no point packaging for them because you can go direct to them yourselves. But all of those you see there, we either have products that you will not be able to get hold of at all because they're not launched out to the wider market, or of course we've got the package status whereby we still pay you what you get, but we've got the expertise. How many of you know the hierarchy at Tandem Bank, for example? I do. How many of you know the hierarchy at Precise Mortgages? I do. West One, I do, etc. Specialist buy-to-let panel, as you can see, there's loads I could add to that, but we've got all the standard ones, the BM Solutions and all those, but we don't tend to get a lot of business from our broker partners for those because they deal with them directly, but there's some on there that you will not be able to possibly access directly. And when it comes, if you want to give the advice, as you see, all of those there, all of those you can give the advice and be pretty much earning the same as if you went direct. And if you want to take advantage of our 0% fee package panel, excuse me, I need to cough. As you can see, we're now up to 9. So if you place a case with us and we are acting as a packager, we're not charging your client an upfront fee or for these 9 lenders or a fee upon completion. And if you compare that to the market, this is what's being charged elsewhere. And these are upfront, by the way, as well. This is to every client. This isn't on completion. This is every single client you put with them. And you've got brokers there, or packagers charging £300 up front. No. Ridiculous. Bridging panel. Again, there's more than on here. This is the ones that we've got on our sourcing system. So access to every single one of these lenders, and we can literally spend less than 60 seconds on our bridge quote system, and it will pull out who will help on particular cases. Our commercial panel, pretty much everybody that you could think of in the market, from the high street all the way down to those lenders that will do the grottiest of the grot. And all the bits in between. Most of the business is the bit in between with the challenger banks, but it's pretty much everybody that we want to do on the marketplace. This is another one of the downloads that's available. You can download, and I'll show you in a couple of minutes how you actually download that. That's coming out very, very soon. But that gives you details of what we receive and also what we pay away on with every lender that we deal with on where you want to give us business. So for instance, it's not going to include BM Solutions or Virgin Money, but it will include every one of the package lenders, second charge lenders, commercial lenders, and specialist buy-to-let lenders. Beware of the bandits. I changed this slide recently. I changed this one last year. Previously, it was because the master broker was only, I think it was about 45 grand and was paying away 7. Well, this one was a lot worse. And I only found out about this last year when I spoke to the introducer, our broker partner, who'd introduced the case to somebody else in 2019, where he was told that he was being paid half the prop fee, £7,000, and we know that the master broker earned 117,000. Just be careful who you deal with. A couple of case studies. I'll fly through these as quickly as I can. This was a case study for a bridge that we did through Roma back in November 21. That's more relevant now when you get to the bottom of it. 20-bed property that had planning for a 10-bed HMO. You can guess what had been happening before our client was purchasing it. Did an 11-month bridge, 2.15 million, no broker or packager fees. Broker partner earned £21,050 on the day of completion. When it completed, it was actually October 22, I've just realised, not November. The client approached us again to rebridge because he was still waiting some elements of planning to come through that had been delayed because of COVID. We gave the advice, and our broker partner earned 25 grand on the day of completion. So far from that client, he's earned £46,000, all on the day of completion. And we've got a client now who is the planning's through, and we're now arranging the exit for him. So it's been a great client for us and our broker partner. But we have a happy client because the property now, with what he's got in place, has more than doubled in value. Case study for a very wealthy 82-year-old expat and his eldest son living in Israel since 2001. I won't go through all of this. It was horrendous. The most difficult case I've ever been involved in the 40 years I've been doing this. We had basically a family that owned lots and lots of properties who had been taken advantage of by every professional that was acting for them in the UK. That's solicitors, accountants, property managers, literally everybody. They were being ripped off. There was work that hadn't been done on the titles of these properties that should have been done 20 years ago, charges outstanding to lenders that don't even exist anymore. It was an absolute horror show. Properties that weren't insured, properties that didn't have the right AST, all sorts of nonsense. So it was appalling. We got it through. Introduced a partner and £45,000 from the case on the day of completion. And this is what our broker partner said on Trustpilot. I'm not going to read the whole thing because it's quite lengthy, but if I could give more than 5 stars, I would. I'll take a sip, read as much as you want, and I'll then move on to the next slide. But basically, the end bit, I've introduced more cases to specialists. And then this guy's retired, by the way. He's a retired mortgage broker who decided, because he was getting lots of calls from his old clients saying, oh, I need to do this, I need to do that, rather than just refer them on to somebody he knows and earn a pittance, he thought, well, if I can start referring these on to somebody that I can trust, I could earn a decent income from this. He earned 114 grand last year, which isn't bad. And he's earning as much as he was when he was fully employed, but he's doing literally none of the work, none at all. And he's just spreading the word. We just completed a deal today for his builder. He literally talks to everybody that he meets and says, guess what? I can help you if you need finance. Case study, another case study. I might just fly through these. We're running out of time. Title borrowers, when I say title, being Lord and Lady, aged 86 and 82, came to us in the middle of COVID. Couldn't understand why there wasn't a load of products available for them, but I did have to explain to them that we were in the middle of a pandemic that was killing people aged 86 and 82, unfortunately. And they did sort of get it towards the end. Wanted to refinance 18 properties, all in the same village. Those of you who know about concentration issues with lenders will know how difficult that is. Some had no EPCs. Almost all were under rented. Some rents had not changed in 20 years because they basically owned half the village and they didn't want the villagers to think badly of them. And also been defrauded of large sums of money. On one occasion, they've defrauded of 8 million quid by somebody. So they didn't trust anybody at all. The second most difficult case I've ever to deal with. Introduced a partner rent 30 grand on the day of completion because we really did hold back on this because they had been ripped off in the past. And because of that, they've recently asked us to refinance all the properties onto new products because we'd only get a two-year product with Castle Trust. So we're now refinancing every single one on now that products have come back for people aged 86 and 82, or 87 and 83 now. We can now place these. And it's not what you know, it's who you know. I cannot stress this enough in our marketplace that how much business we get through because of my length of time in the industry and my contacts with the industry. So this was a husband and wife business running two very profitable children's nurseries. Mr. run the financial side, Mrs. run the looking after the kids side, didn't do anything on the financial at all. Mr. defrauded HMRC of 850 grand. It was only found out when a member of staff contacted HMRC about a matter and they said, well, hang on a minute, we've not got any tax and national insurance paid in 20 years. Investigation was done. He was arrested. 5 years in prison. She divorced him. Proceeds of Crime Act charge on every single property. For those of you who have tried to get a mortgage or have tried to refinance a property with a Proceeds of Crime Act charge, you'll know how difficult it is. And you can't get them all through. We had one once from a guy who was actually a month. It was a loan shark who had a Proceeds of Crime Act charge and approached us to see if we could get rid of it. That we can't do. That's stretching it a bit too far. But this one, I could see that this is a deal where you can see that there's a valid reason for it. But Barclays called in both commercial mortgages, reputational risk. Northern Rock residential mortgage had expired. She's about to lose everything. Declined by everybody. There might be some of you out there might even remember the deal and had it declined as well because of reputational risk. What did we do? My team went to Together Money, their compliance department. So an underwriter's gone to the compliance department and said, this is the case. Proceeds of Crime Act charges, and the compliance department's gone, oh, no, not touching that. No. So case handed to me to sign off as a decline. I thought, no, there's a deal here to be done. So I then had a 10-minute conversation with a director at Together that I've known now for probably a good 35 years. I won't say his name. Gave him an overview of the case in the background. He went to the compliance department. There's a difference when a director goes to a compliance department than when an underwriter does. And of course, what happened? They said yes. So we then proceeded, got everything done, everything paid off, and paid the broker just under 12 grand under their completion. This client, now I spoke to her about, I think it was about 2 months ago, and you've never ever come across a client as eternally grateful as this woman because she was losing literally everything. Business, income, home, investments, the lot was going to go. And because of one phone call, we managed to save everything. Cases you can't place. We are almost at the end now, and I am actually ahead of time, I'm pleased to say. Leave your details or type something in the message box down the bottom. I see there are some questions. I won't go through those just. I might, if we have time, just quickly go through them. Complete the decision in principle form that we sent you this afternoon. If you haven't received one from us before, go to our website, submit inquiries online, or alternatively, old school, just pick up the phone and speak to our team. Normally the best way, to be honest. Just give the team a call. They're ready to speak to you. LinkedIn, you will be getting a LinkedIn. If you're on LinkedIn, you'll be getting a request from me at some stage. We've had a lot of people sign up today and a lot of delegates attending. But you will receive something from me. Please accept it. If your name's John Smith, I might not be able to find you. So please, sorry, the screen just went there. So please request to link with me if you do have a common name, because sometimes you can type in a name and all of a sudden there's like 100,000 results come up. So hopefully we can get linked. If you like what you've seen today and you want to start placing business with us, either on a packaged or a introduced only basis, you can do. You'll be sent one of these. We need one of these back before we can pay you any commission, just so you're aware. If you sign up online or have signed up online, you've actually already signed an agency application form. Okay, next specialist mortgage web show, 20th of April. We've got it a little bit later because of all the various holidays that are happening in April. So we have Glenn Hawke talking about bridging, Pepper talking about second charges, Shawbrook, I would imagine, talking about buy-to-lets. I'm not entirely sure. Together talking probably about commercial, or maybe vice versa on those two. But a decent spread of lenders, as always. Other shows, you can register for as many as you like. These are the shows we've currently got planned all the way up to November. We may be adding some. We're not sure yet. We will certainly be adding some more Sutton specialists. We've got a couple of like that director level speakers lined up for later on this year. So keep an eye out on those. But again, you'll get the emails for when the shows are happening. Now, this is where, in a moment, I'm hoping this is where the magic of IT will always work, that my IT team is going to put at the top of this. There you go. Don't click on it yet. But you'll see just above the slide has appeared. Click here and leave your feedback and download giveaways. When you click on that, you will leave the presentation completely, but that will then show you the links to download. You can actually download the documentation straight away, or see Roger Morris and myself talk about various matters and putting the world to rights last week. But don't click on it yet, if you would, because there's still a bit more to give away. CPD certificate will be emailed to you by close of business tomorrow. If you do not receive, check your spam and then give us a call, not the other way around, because it is to do it manually is fairly labor intensive. Feedback, please help us out. If you Google Google Review Specialist Hub or Trustpilot Specialist Hub, today's events are free to lenders and obviously delegates as well. These are all our own expense. So just to help us out and bang up our ratings on Google and Trustpilot, as long as you like what you've seen today. If you haven't liked it, you can still put a review up. That's entirely up to you. Please do not Google Specialists with an S Hub. That's a completely different company that does training and construction, I believe. Once again, a big thank you to Selena for sponsoring today's event. And I think we're about to get to the last slide. I believe we are. Yes, we are. But what I'm going to do, I'm just going to do a couple of questions. We've still got 5 minutes. So, and this might still be relevant. Let's just say there's a few thanks from people. Okay, there's a few comments. I won't go through the comments. I'll just go through the questions. I'm with TMA for compliance support as a DA and pay heavy on CRM sourcing systems and so forth. Do you have any other options to explore? That's from Sadia. Sadia, could we have a conversation maybe afterwards on that? Because that I could probably spend half an hour just talking on that alone. But maybe I'll get my team to make a note and remind me when I get back in the office to give you a call, if that's okay. There's a thank you. And Sadia's also said, can someone call me regarding elderly couple mortgage options? Absolutely, we'll cover the same thing. Right, so enjoy the rest of your day, everyone. Till next month, stay safe and prosperous. As you can see, do not try and click on the click here, the button on the slide, because it won't work. You'll be clicking away for no reason. I've even put little arrows up there so that you know where to go. Search Google Review Specialist Hub, Trustpilot Specialist Hub. Leave us a review if you would. Enjoy the rest of your day, and until losing my speech. Until next month, stay safe, stay sane, and stay prosperous if you possibly can. Thank you very much indeed.